Traders, very important video. We're going to talk about why traders lose money and what to do about it. So ask yourself, are you consistently profitable, or is your account slowly eroding away or quickly eroding away? If you're struggling to stay profitable in this game, watch this video through to the end, because this is going to be the most important video you could ever watch, in my opinion. The information here could be a game changer for you. On Friday, I sent this into my VIP group. Important aspects of growing and protecting your account: trading plan, position size. And the question is, are you compliant with your trading plan? Do you have a trading plan? If you're jumping into trades with odd lot sizes and you don't have a plan, that is a recipe for disaster. So what we're going to do today is, what I'll do is I'll share with you my own trading plan strategy. And out of that, hopefully you are inspired to take what's useful for you, discard the rest, whatever you do, but develop your own profitable trading strategy. All you need is an edge in the market and the discipline to stick with it. Okay, so I sent a trade signal into VIP today. This is the Asian session. So we're going with the Aussie Kiwi. I'm going to explain why I took this trade. Okay, here's my trading plan. It's a live trade on my live account, or one of my live accounts. So let's just go over to MT4. This is where I'm looking for signals or alerts. Number one, I want to be alerted when there's an opportunity. So here we have an Aussie Kiwi alert. This is it. There's one of them there, and there's another one here. All right, it's a red dot. It's telling me that this is overextended, and that's what I'm looking for. Have a look at this trend. Trades down, and we get a stop run. We get this move here, and then they hit stops. Okay, we get a run, retrace, get a run, retrace. That's what's going on, and every one of these retraces gives us an opportunity to get involved. The dot, look at all these opportunities here. These are trade opportunities. You click on these, come into the chart. Does it stack up? Does it meet my rules of engagement? That's it. So number one, we need alerts. This alert brought me into the chart. Now, my trading plan is to trade the session times, or trading into the session open. And I'm looking for the opportunity early on through the session open. Hope that makes sense. All right, so here we have the Asian session open. This line here. The opportunity is going to be from this point and early on into the open, into the session open. And we do the same thing with the New York open and the London open. So that's the trading opportunity, the trading time frame. Our indicators will give you a shaded area. Okay, so this is the shaded zone for the Asian session. So it's approaching the session open time. The alert fires. I'm looking for the opportunity. Red dot, I want to short it, to sell. Now, here's my set of rules. The higher time frame must be complementary. So, we can go out and have a look at multiple charts, if you like. But the indicators we have give us the information. This indicator down here is telling me that the 1 hour, 2 hour, 4 hour, daily and weekly are bearish. The 1 hour chart here, we can see clearly it's a bearish trend. So I'm looking for the retrace into the mean. So this midline, okay, it's broken through the mean here, so we want to be a little bit careful. But generally, we'll have a run and it'll trade back. We'll have a run and it retraces. So I'm always looking for the retrace in the trend, for the opportunity. Now, if we'd have taken all of these, 1, 2, 3, 4, okay, so there's, say 4 winning trades in this trend. At some stage, this is going to do that. Every now and again, we'll get a losing trade out of it. What I want to see heading into the session open is, I want to see it ranging, which it is, grinding up. It needs to break a previous level. So it's attacking liquidity above this previous daily level. What I'm looking for is the grind into, and then I want to see a strong move like this with a big thin candle. And then most likely you'll see the retrace back up, and then it'll continue down. So this is the price action I want to see. You get the range, you get a bit of a fake out, or shake out I should say, and then you get big red candle. Now I tend to go in a little early. I like to see this ranging, and hitting liquidity above in a bearish trend, and I'll take that trade. I hope this makes sense. If you're conservative, wait for this big red candle here and then go in on the pullback, looking for the pullback into this range. Trying to keep this as simple as possible, and then that your entry point will be here. So bearish trend, we want to see that. See how this is ranging here? And then we get that. Well, we didn't get the pullback back into the range. It's ranging here, we get that, and then the pullback in. See that? That's on the higher time frame, but I'm looking for this on the lower time frame. And the other thing to look for on the lower time frame is more or less a 3-drive pattern. Yeah, do we have it here? We've got this drive, we've got this drive, and then we've got this drive. Okay, so look for a 3-drive pattern, and you want to see even number of buy and sell in the range, balance area. This is the daily. It takes out liquidity above, and then we want to see this long thin candle here, okay, and then that. I hope that is clear. So that's on the 5-minute. That's the price action I want to see. I'm actually going to, and I mean, you can trade it on the 5-minute if you want to. The volatility is relative to the time frame. Now I'm going to go out to the 4H. Now here's the thing. We've got, well, we can actually mark these up here. Look at these lines that we have on our chart. This is really, really important. You want to break above a previous daily, weekly, or monthly. This is a daily. Copy it again. Another yellow line here. That's a daily. Copy it again. So mark up these yellow lines. And then this white line is a monthly. And we're going to work off these levels. Copy it, paste. There's another monthly here. Okay, back down here we've got the daily. So it's broken through the daily. It's taken out liquidity above here. So this is going to be important in terms of where I want to set up my stop loss. So if I'm trading this off the 1 hour, notice this. See the cloud here? Let's just bump up the cloud. Trend channel, scroll down, cloud, we'll just bump it up. So notice this trend here. We've got these lines running. So we've got this midline, the mean, broken through the mean. So that's a little bit of a warning sign with this higher low here. So it's starting to trend up here. So just be a bit careful. Is this going to be, where we get a break of shift in the trend? Okay, possibly, maybe. That's the risk. However, everything stacks up. The higher time frames are bearish. Now we've got this group of higher time frame levels here, and we've got this cloud. Notice in this trend, it runs, retraces, okay, runs, retraces under the cloud. It hasn't broken the cloud. And that's going to be the opportunities. We're looking for the pullback into the mean. There's an entry. All right, it's traded out. We've got one deviation out. Didn't quite pull right back into here. I don't mind that. And you'll see the red dot on the 3-minute and the 5-minute will fire at these points. Okay, so if it's trading under and we've got a bit of a pullback heading into the mean, I'm looking to trade it. And as I said, we'll go off our little dots, because these dots tell us when the pullback is overextended. And as I said, at some stage, this will trade through it and we'll get that. But 1, 2, 3, 4. There's 5 trades here so far. We've got, a 4 out of 5. This could be a 5 out of 5, or that can happen. So that's the risk. We need to understand the risk. Need to look for on the chart are, again, look at this level here, this monthly, daily, and there's a weekly in there. The orange, the yellow, look at this. And these dots. That's pretty solid. So I will set up my stop loss accordingly. We'll go in, short position, market, stop loss. I'm going to go above here and go for a 1-to-1 at least. So 1-to-1, you can either close it, just trade it all 1-to-1 risk reward and be done with it. Or you can look to take 2/3 of your position off and pull your stop loss to be in the money. And, if you did that back up in here, for example, look at that, and you've got 1/3 of your position still running. Go a little bit more advanced, or you can just go for 1-to-1 and up to you. So I'm happy with this setup with my stop loss sitting above these red dots and monthly, weekly, daily combo. I'm good with that. So what we've got here is the probability factor. It's definitely in our favor. The possibility that it blows through and we get that, yeah, it's there. But the probability factor is in our favor. We have a strategy that is giving us a high win rate. I think our alerts, at least our VIP group alerts or signals, have given us an 85% win rate over the last, I don't know, 18 to 20 trades. That's pretty significant. And again, the volatility is relevant to the time frame. So you could trade this on the 1 hour. Same strategy, you can trade it on the 4 hour. And we're looking for the same thing on the 4 hour or the daily. I mean, I generally trade the 4 hour time frame thinking that I might venture into more trades on the hourly, just so that we get a bit more involved with the markets, and we've got a few more trade signals in VIP. Okay, so I might venture down to the hourly from here on, more so. More signals. We should see the same win rate, but yeah, a bit more volatility involved on the lower time frame. So this is a set and forget scenario. That's it. Either our target is reached or the stop loss gets hit. That's it. Set and forget. Don't mess around with it. Leave it alone. Commit to that. That's stress-free trading. Now, we're going to talk about risk management. Jumping in here with odd lot sizes is going to be a big mistake. Let's just head back over to this trade signal. It's up to you how you do this, but look, I'm conservative. See this? This is 0.1% of my account. It's based on the balance. It's 0.1% of the account balance. I would tend to look for trades between 0.1% and 0.2% depending. This is so important that your position size is a percent of your account, and this is consistent. So no matter what your stop loss range is, you're always risking, look, $15 today with the account that I'm running here and this particular account balance. So here's the thing. You can allow up to a maximum, let's say 2% exposure. How many trades at 0.2? That's 10. That's giving you 10 trades a day. So let's just say you want to take 5 trades a day. So maximum per trade is going to be 0.4%. 4 5s is 20. So that'll give you 5 trades and maximum exposure of 2%. So work out how many trades you think you're going to take. If it's 5 and your maximum exposure is that, then this is your lot size, or not your lot size, this is your position size for each trade that you take, and stick to that. Once you've reached your 5 trades, you're risking 2% of your account, leave it at that. I've got an EA running, and the EA tends to be a little bit aggressive, so I'll tend to go in with 0.1 or 0.15 with my manual trades, up to 0.2 max per trade. And I use this Trade Manager tool over here. You can do a search in MT4 in Indicators Trade Manager, and that's what it looks like. That's pretty good. But whatever thing you use, just be able to calculate the risk as a percentage of your account balance. This is the most important thing that you really need to nail. Don't get greedy. Be consistent and have a winning strategy that is consistently profitable, giving you an edge in the market. And that's how you grow your account. So lastly, I'm always looking for, if it's a bearish trend, the last green candle. Let's just bump this up a little bit. Bearish trend, the last green candle on the time frame. All right, there's an entry. There's an entry. So keep an eye on this midline, the mean, and keep an eye on bearish trend, last green candle. Or actually, there's one here as well. And the pullback into this zone. There it is. Okay, here. Or here, this one. Right, so we didn't get the pullback up in here, fair enough. We didn't get the pullback up in here, fair enough. There's an entry, and the opposite for a bullish trend. Our indicators will give us a lot of information, so we're always going to look at these. This range here is called a balance area. If you go to the lower time frame, it'll kind of look like that, and then we get the breakout. Balance of buy and sell. And then we get this imbalance, so that's a bearish imbalance. Just coming back to the video, I had a lunch break, and we actually had our target reached. I've sent this into VIP. So this is a profitable trade for the Asian session today. Now, some of our members may have closed this position here at 1-to-1. That's fine. If you're still in this trade, closing 2/3 of your position here is profitable. Pull your stop loss down to above the previous high, and then we trail the rest. And if the stop loss gets taken out, it's also a winning trade. And we give ourselves the opportunity to get in early on a potential run like that if it continues, if the trend continues. Guys, jump on board. I want to invite you to join me on this journey. I want to make this available for people. I don't want to give it away, but I am more or less giving it away for seriously the price of a coffee and cake or a hamburger, whatever it is. You shout me that once a month, and look, it's only $19.95. Try it and be more than pleasantly surprised. So with that, hope you have a great day. Safe trading and see you in the next one.